Let's get to Tesla here, continuing to drive lower in today's session, touching its lowest level in 2 years. Shares have been cut nearly in half this year alone, and the Chartmaster is firm on his call. Keep selling. So, Carter, what are the charts saying?
Yeah,
they just sell.
They say kind of keep selling. But, I mean, what a mess. Here, just a simple exercise. If you were just to find, we know almost everything is bounced since October 13th. If you were to look over a broad aggregate like the Russell 3000, find stocks that are making new 52-week lows today. It's a very small group of a dozen or two, and this is not a small stock. Anyway, I have two charts, the exact same time frame. You can draw the lines any way you want, but if I think the lines draw themselves. I mean, what we have here, and this is sort of very symmetrical, that Tesla has respected these lines, and now, of course, we are hovering right here at a break juncture. We actually undercut that low ever so slightly today. Let's look at the same thing and draw the lines a different way. And some people like to call their formations, name them. A head and shoulders is something that's been documented for decades and decades, and that's what this is. Now, how to know how low it will go? The truth is, it's anybody's guess. But we close around 180, and I think certainly 150 is in the cards.
Carter, is that line 180? Do we actually breach that line? And I guess my question is, if for some reason, the stock manages to find enough oomph to get above that line, does it make you more confident maybe that there is hope that that line could actually be a floor for the stock?
Sure. I mean, that's the nature. We did actually undercut it ever so slightly, and you can still save yourself, so to speak. But the real issue is twofold. One, it's just how poor the relative strength is. To have had almost all equities globally bounce for the better part of 4 weeks, 5 weeks straight, and to not participate means you're just not attracting buyers, which means people are looking at it but buying something else. And then the second thing is, let's say it does start to bounce and it comes to life a little bit. There's so many people who are now trapped above who would love to be out, that you encounter overhead supply on any kind of rebound. It's just, it's heavy. It acts poorly.
All right, Carter, thank you. We'll see you shortly on Options Action. Steve Grasso, are you with Carter Worth? Sell it?
Yeah. I'm looking at the chart as well as he was speaking, and the next area of support is 167. That brings you back to 2020 levels, and it could go as low, what I'm looking at is the mid-20s. So 167, stutter step support, down to 125.
Jeff Mills?
Yeah, I totally agree. I mean, I've been saying to sell Tesla for a while, and I've been wrong, starting to look right. But listen, I think that maybe even some people looking to step into a stock like this say, you know what, maybe we get a Fed pivot, maybe interest rates drop, and then you get a pop for some of these tech names. I just don't think that's the reality. The bond market now is pricing in the same peak Fed funds rate that it was prior to that soft CPI print. So for the bond markets, nothing has changed. So I would not be wading into names like this that look technically weak in hopes that we get some sort of reversing course in interest rates. I just don't think it's going to happen. So I agree. I would sell Tesla here.
Another issue is that even if there is some sort of reprieve for tech stocks, Tesla might not fall into the category just because of all the other stuff that's going on with Elon Musk, Tim.
Well, and also it's an auto company, right? I mean, I thought, if anything, we were going to be introducing the concept that auto companies have fallen under a lot of pressure. I realized GM had some positive comments this week about their EV business and et cetera, and Ford and GM are well off their lows. But if you as a guy who's long both of those stocks and think those fundamentals are great and those valuations are at least defendable, you can't tell me that Tesla doesn't get pushed around by the same auto trade and the heaviness we're seeing in the cyclicality. You go housing and then you go straight to autos in terms of where the Fed is impacting the macro economy. And I would also just get to the marginal buyer of Tesla stock outside of institutions has been a retail investor. And if you see the fallout in some of the asset classes, including crypto and some of the high multiple tech, this is the group of folks that were defending Elon and defending the stock at all points. The 3 or 4 big rally points for Tesla over the last 3 years have been an S&P inclusion, a stock split, and of course the good stuff, the profitability that got them into the S&P, and production numbers, really the numbers that started to get them when they started talking about 500,000. And so some of those positives are things that clearly are in the price. I'm not sure what those positives really are going forward, especially when you consider the headwinds in the auto sector.